Alright, how's everyone doing? This is Anon. This is not financial advice. Nothing here is financial advice, and this is for entertainment purposes only. I'm going to be going ahead and covering kind of what went on today, and we will kind of go from there, answer questions anyone has, and that's pretty much it right now. Let me go ahead and get people in here first, and then we'll start going over stuff. Alright. How's it going, everybody? See, people are starting to join for our evening chats. Alright, so I was talking to my wife. Quack, you got two in a row. First one twice. 2 times in a row. What's up, Mitch? What's going on, man? Alright. Whiskey on the rocks. First I win. Oh, I think Quack got you, man. What's up, Jason? What's up, Tom? What's up, Sean? You're drinking some whiskey on the rocks? Very nice. I might join you with my scotch. Scotch or beer? I don't know. Probably do scotch. Alright, let's see. Let's get this and put it in the Discord. What's up, Luther? What's up, Jay? Alright. Need to start up Discord. I just got downstairs. I was talking to my wife and hanging out. Alright. Let's see what I missed. Yeah, I actually was busy at work today, unfortunately, so I did not get time to do all the things that I wanted to do. But, let's see. Get it in here. Alright. What's up, Goat? What's up, Fish? What's up, Spooner? Looks like the market's going to break 410 on the SPY, carry the entire market. Will ATER follow into 4? Yeah, I think we have a chance of going into 4. I mean, obviously, we thought we were going to get there today. We hit like 392, and we bounced perfectly off of it, and then kind of just bled out the rest of the day. If you kind of were watching it, I think I posted it. Once I saw them kind of bleeding off, I was thinking they were going to try to keep it under 4 today. That was kind of going to be their goal, and they got that. There was definitely people buying, but you could tell that there was an attempt to keep this from moving up. Wednesday will be interesting because I think that's a day that options will have to be kind of accounted for a little bit more because you're starting to get 2 days away from an OPEX. So all right, let's see, we got some people coming in. What's up, Becca? What's up, Jay? What's up, Drake? What's up, Tom? Some McKellen? No, I drink my own whiskey that I make. I age it in a barrel. It's just this, it's called Shalig. You can hear it pouring. I have my own barrel. It comes out really slow though, because the spigot on it's like tiny. Oh, that was probably more than I probably should have had. Oh, well, I had 2 green days in a row. I guess I can treat myself. Hopefully it'll help my throat too. What's up? Valjean, Phil, D, Conky Dong. What's up, dude? Love that name. Joseph Lafranc, or LaFrance. No, it's LaFrance. LaFrance or Lafranc? Alright, got some Coke and chips listening to Anon. Here we go. Trying to play the bear market also. When do the game bears come out to play? For anyone that doesn't understand that, that's a Wall Street Bets thing. They always joke about the bears and they have rainbows and all this stuff. I'm actually peeing. I just say I'm pouring whiskey. It's scotch, but yeah. See, I wouldn't have to take any breaks anymore. All right, so let's see what's going on. I had a bunch of people write me, and they were trying to figure out. So, I guess what I could do is Fish nicely sent me some screenshots of Bloomberg. So, if we look here real quick. You can see today there was a lot of calls being, bought. Not a lot of puts. Yet, we went nowhere, right? And if you look at the total open interest on calls and versus puts, and some of these puts are probably, bullish, and some of these calls are probably bearish, but it's very skewed one way. But I think they're trying not to hedge these options because I don't think they believe that retail will actually execute on them. They think we're bluffing, basically, that we won't actually demand our shares, because if we did, then they'd actually have to start hedging. But I think they're basically trying not to hedge because they don't think that retail will actually exercise their calls. So we'll find out. What's up over Minding? What's up, Mason? What's up? Is it EXO Venom? The reason for 2 barrels. Don't get them confused. Sold 20 puts at 350. Yeah, I mean, I think we finish over that number, so you'll probably just collect the premium, and they won't have to account for those shares. But yeah, I mean, just going over this real fast, you can see these are the most popular options right now are like the 750s, obviously because they got real cheap. They have the highest amount of volume that came today. The open interest on them and the 5s is really, really high. And even the 10s is really high as well. But I can just show you guys, what I was seeing on the options, which was, how active was the shorting in the closing hour today? I don't know. Because let me see. He didn't provide that information. Fish, you're in here, right? Do you have? You're not going to have access to that, but I guess if you're able to pull the information that you showed me the other day, that showed covering. I don't think it breaks it down by hours, though. I think it's just by the daily, if I remember correctly. So we wouldn't know how much actually got shorted at the end of today. But I mean. Is that correct? It only breaks it down by the day, right, Fish? Yeah, but I mean, you can tell. And the thing is, it's not even that much volume because, even though we had 10 million volume, the only sell this was a decent sell bar, and then all these things down here, that's a halfway. But I mean, these aren't that many. That's the volume of them is not that high. What's the volume on that? 100,000 shares. Hyun. Thanks, Daddy, for the stream. Now you're welcome. Someone said that 20K calls for the 20th got canceled. I don't know if it canceled, but they may have closed them. Let's see. I mean, you can see right here, the percentage change was down 26%. I don't think that represents, let's see. The volume change percentage, I'm guessing it's for the day, was down 34%. So we'd have to, let me see, did I save the open interest from yesterday? I really should do that. I really should start saving all these options, but let me just see. So the 750s yesterday had about 40,000, and today they have 23. So what's that? Right? Let's see. So it's like 40 minus 23 right now that we have current. So it's about 17. Not, yeah. I was going to say it wasn't that high. It wasn't 20K calls. It was 17K. But yeah, I mean, that's what it looks like. It looks like there was a decent change. Big change EW. Yeah, I mean, it's good. It was a good size change. I mean, to me, I don't know what's going to happen. Obviously, from what I was seeing on the options chains, and I showed you guys this. This isn't today's. This was yesterday's. But yet, what I noticed was today they started stacking these down here. These out of the money puts, right? They started stacking those, and that's what they've done in the past is they basically start negating all this stuff up here, and it's cheaper. Like, look, like you would have to pay, for $4, right? You'd have to pay, 24 cents per, so it's like $24, right, per contract. But if you look over here, if you're buying like a 250, it's only like, 8 to 9 cents per, share. Like, so when you do the math on that, they're starting to stack these now, but it's negating some of this stuff like that's, higher up on the chain. And that's what they've been doing these last couple of weeks. If you actually look at, for example, let me see if I saved any of the old OPEXs from here. Let's look at the 6. Is that what this was? Here's one. Okay. So just to show you, I know this was on, I guess, maybe Thursday, the day before, right? And look what they did. So we were sitting around here between like at 4 something on the 6, right? And look what they start doing. They start stacking these out of the money when they're super cheap, right? So they start stacking these, right? And then what they do is they start turning around and buying these like, near, like 5, 6, they'll start stacking some like in the money puts. And if there's nobody buying down here to basically negate that, then they'll be able to push it down. And that's what they've been doing. That's one example. Let's see if we can find another one. Let's see if we zoom in. So here's another one, right? So this was from the 6 was the OPEX, and it looks like this was for this was on the Monday the 2nd, May 2nd. So we were sitting up here at like 580 or something like that when I wrote this. And look, you had a good amount of open interest up here. You had a decent amount here in the money. But look what they're doing. They're starting to stack these, and look how, they're cheaper than what the calls are. So like they're actually stacking these out of the money. And then what they do is they start, by the time it gets to Thursday and Friday, they start buying deep in the money ones that start pushing it down. And then it creates basically like a reverse gamma ramp where all of a sudden now all these, they have to start hedging and they start de-hedging calls. And so this is what their tactic is usually, it seems like. And so, people are always like, well, how do you beat that? And the answer is you would have to buy a ton of stuff that would have to be hedged and will likely be exercised, and provided for. So, like, I think I showed people the other day, like, okay, if this is, this is not today's, but I'm just saying, like, if you're buying, and this is all not financial advice, but this is like a hypothetical, right? So what if, 20,000 people all bought $1 contract and had enough money to actually afford those shares, right? So you pay your premium and then you have to exercise these for $1, Like if 20,000 people hypothetically did that, you would have to have a ton of hedging happen because those are likely to be in the money by Friday. And that would actually make them start going out to the market and buying, which would send it back up into this range where there's a good amount of, open interest. But, people aren't doing that. They keep buying all these because, and like, listen, you need all this stuff too, but you have to realize that these market makers are smart, and what they've been doing each week, and it works, is buying these out of the money puts, and then they basically just, by Thursday and Friday, they start buying a ton of in the money puts that sends it down, and then there's not enough things down here to actually force them to like hedge. So they just get pushed down to wherever max pain is, and I think we're at 4. That's where max pain is, and we'll probably just stay at 4. We're slightly below it, and then all the options down here will all get burned because nobody was willing to actually, buy things that were going to make the market maker hedge, and then, potentially, they may still, because they could always eat FTDs. All these people that are buying shares, which are great, but like they could choose not to, number one, deliver those shares. So like, say, you bought them on Monday, right? T+3, they should be there by Thursday or Friday. Well, one's if they just decide not to, buy your shares. They just it decided to eat those FTDs and go back on reg show. That's a possibility too. Like, they could choose not to buy those shares at that moment, decide to eat the fees for, failing to deliver, but then they wouldn't have to actually buy these shares during this gamma ramp. Like, these are all things that can happen. So, but yeah, I mean, overall, we went up 11% on Monday, and we went up like 4.6% today with a little bit after hours. And, we'll test 4 again. Like, we tested 393. We bounced off of it. We'll see. Somebody's obviously walking this up. But there was definitely resistance. Like, people are fighting this because market makers don't want this to run, right? It does them no good. They're more profitable if the stock stays right here at this level and never moves. So that's going to be obviously their goal because that's what they want. But, here we had a good day this day. We had a lot of buying here. And, we basically went sideways for today. But we're still up. And, yeah, I would have loved to run more because the SPY was running. But you can tell somebody is trying to make sure the stock doesn't run. And so, all right. So isn't it highly possible we could have some smart money or a whale come in and totally kick the crap out of shorts in the money market? Yeah, I mean, that can happen. But once again, it hasn't happened yet. So either they're saving their ammo or these longs are fine, just slowly raising the price. Because you have to remember, these longs, they're not going to, most of them aren't going to sell. They're basically entering Aterian because it was like pretty undervalued, and so they were willing to roll the dice on the company. That's why they entered. And plus, they can make more money just lending out their shares. So, that's what they're doing. They bought something that's going to be profitable for them because as long as retail is interested in this and playing options on it, there's a possibility for them to, the market makers to make money. And, for this, if the shorts are still, shorting, there's money to be made lending out their shares. And that's what these guys have done. They, these institutions are buying in, and for them, like, if this thing runs to 12 or 15 or 20, they probably won't sell because that's not typically what they do. They're playing this long. So you just have to think like them. Like, they don't day trade. They don't, they buy a stock some of them will, the more active ones will do it. But these Vanguards, the BlackRock, like typically they just hold those shares and then they just lend out stuff to make a little bit extra money. It looks like we need more $3 calls to ramp up Friday. Yeah, I mean, 3s or anything that's really kind of lower, stuff that actually has to be hedged. But, I mean, they're not going to do it unless they think that someone's actually going to ask for those shares at the end of the day. So, Let's see. Let me grab the options change real quick and pull it up for you guys, what today's looks like. Okay. Yeah, so there was a good amount of 750 activities, and you can see it was, it was down from yesterday, but I think the fight's really going to be down here, which you can't see yet. So let me. Oh wait, Ace had given me some program that he said was easier. I haven't used it yet because I totally forgot about it until this now. He said it's like some sort of snipper tool that you can do things faster. So I need to look into that. I really should do it now, just while I'm thinking of it, but I won't do it right now because you guys are here waiting to hear, right, what's going on. Okay, so let me grab. Okay, so we'll grab a little bit of. All right, so here we are, basically at the same spot we were before. Got to zoom out a little bit here. But look, they got a decent amount of stuff, oops, in the money as well. And so they're not having to stack a whole lot because they have a lot of deep in the money puts. But I did hear that we were seeing some sweeps that were they were selling $22 calls, and they were they were selling $22 puts and also $10 puts. There's a whole bunch of stuff going on with the stock, and so we're gonna have to kind of really figure out where they're going with this, because right now it looks like they're just trying to pin it. But there is a possibility that somebody comes in and just completely screws up their plans. Whether that's retail, whether it's a long that's just being patient and then just waiting until everything gets cheaper, because obviously tomorrow is going to be a pretty interesting day, because you would have to, you'd have to start hedging really tomorrow. If this starts running up into the fours tomorrow, then my guess is they have not hedged these 2 million shares or even some of these things that are building up. But I just want everyone to remember that as they're stacking these down here, they're creating basically, and they'll do it even more probably at the 350s tomorrow as they get cheaper. But they're starting to stack these out of the money puts, and that's because they're trying to create a large ramp downwards also, like they do each week on OPEX. And some of that's retail, some of it's smart money, but either way, the combination does the same thing as, when you have a large amount of open interest up here, the difference is when they start sending the stock down with shorting, and you're basically aligning market makers and shorts. When you have a huge amount of open interest up here that's out of the money, what ends up happening is you align shorts and market makers, because they both have a common goal now, which is to get the stock down. And so people keep rolling their eyes and well, that's, if you don't have the money options, you don't have a gamma squeeze. Yes, that's true. But at the same time, you don't actually get any squeeze if you don't have a good base of in the money, options that are going to, bullish. So unless everybody was selling a bunch of $4, puts, which, you can already tell they have not been doing. But if everybody was selling $4 puts, the market maker now has the decision. They can either let the stock be down here at 350 on Friday and then provide all those shares, because that's what they'd have to do, or they'd have to have the stock above this mark.
basically that's that line in the sand. They have to make a decision. Like, if there was a whole bunch of like $4, sold, but would that be enough to actually then make these guys start going, well, now we have to start hedging these, and we have to start there's lots of different things that could happen. And this is not financial advice. I'm not telling you guys how to like play the options chains. I'm just saying, if you look at it, because this is obviously something that's interesting, because you can see what they're doing on their side, and you can see what everyone is doing on this side, which is they're buying these out of the money options. But what I'm telling you is each week, at least that we've been losing, they start doing this, and then they just stack a whole bunch of like, in the money, like five, $6 puts, and then drive the price down. And then, they also short and, spoof and do all sorts of other things. And if retail doesn't have a lot of volume, then they get this done and they end up down here. And that's what's happened in the past. And max pain right now is $4. So, I mean, you're looking at, right now, this area, my guess would be this is the battleground for this week, like right here, because until we start seeing really upwards price movement, once it gets above this point, then it's like a magnet. It will start having to hedge these, because if somebody's slapping the ask and it's starting to move up and they haven't hedged these, then you will see them scramble to try to get hedging done. Obviously, if we finish over 5, that's super bullish, and there will be a lot of shares that need to be accounted for. Their goal is going to be everything in their power to keep it under 5, because if this runs over 5, then you start actually running the risk of a real like squeeze. At this point right now, they've been able to keep kind of retail at bay in some of these longs. So, but this is today's option chain. Okay, so looks like we need more $3 call. Yeah, like $3 or deeper in the money. It all depends. But once again, this is not financial advice. I don't get the idea of buying $2 when we're already above it. No, it's fine. So you can buy calls that are in the money. What I mean by that is everyone thinks that calls are like something that you buy and then you hope it gets to. But you can actually play something what's a little bit safer, which is you can buy calls that are lower than you. You pay this premium. So you basically take this, whatever you actually get the stock or the shares at, right? These are in sets of 100. So you take these whatever number this is. Say you slap, you're trying to get it and you got it maybe for 150. So you have to pay $150 premium. And then at the end of expiry, if you are still in the money, you have the option to buy those shares at that strike. So you would take 200 basically, because you would pay $2 per share, right? Because that's what the strike price is. And then you would also, on top of that, have to pay the premium of $1.50 in this case. That's what we said you bought it for. So you would need a total of about $350 to actually get those shares delivered to you. But they're considered safer because they're in the money. And you're also making the market maker give you these shares. So you can buy shares that are already in the money. You don't have to have them higher. So, everyone wants the stock to run to here, but, you can buy things that are, 0.5 cents, but you just have to pay a higher premium. And it's basically at that point, it should be paying almost what the stock is worth. All right. It looks like we have 850 in the money calls for Friday. $850. Oh, right now, currently, if we added up all the open interest, and we're assuming that most of these down here, especially these levels, are going to be at least bullish. These ones up here could be a mixed bag, but most of these are not. No one's selling probably $2 or $3 calls when the stock's sitting at $350. So we've got 104 people watching and 38 likes. Please slap the like. Okay. Yeah, if you can hit the like or subscribe, that'd be great. I don't typically ask a lot, so what's a realistic price target once shorts start to cover? I mean, there's probably about 12 million to 13 million, shorts or shares that are shorted. So if you figure if they took $1 million and the stock went up, when did the stock go up on Monday? And they said they returned $1 million, roughly. So it was like 11%. So you'd have to, you'd be looking at probably. And here's the other thing. You can't. This is where it gets hard to calculate, because if they were just doing this and had normal sell pressure and all that stuff, it's much different, because as soon as retail FOMO's in, then it gets harder for them to cover just, when nobody else wants the stock. Nowadays, if once retail gets in and starts FOMOing, just like throws money in, then they have to, they're also trying to cover during that time. So you get a lot of buying pressure. So the stock really actually runs more because of that extra buying pressure. So, I mean, we're saying we need more deep in the money calls is nice, but they're extremely expensive. Yeah, I mean, so here's the thing. Like, so if you have, for example, a bunch of $5 calls, right? And you bought them for what, like $6, $7 per contract, right? That's great. But if we finish at $3.50 at the end of the week, then you just lost all the, hundreds of contracts that you had at that level. So it doesn't matter how cheap they are if you finish down here. So, Matt, I understand what you're saying, but at the same time, like, you don't get the prize unless there's enough stuff down here to actually offset what they're doing over here, in my opinion. And someone can disagree with me on that, but I'm just saying, like, we have a ton of open interest up here, right? And everyone keeps saying, oh, well, for a gamma squeeze to happen, you have to have a ton of, out of the money calls. Yeah, like, once again, that is true. But we already have that right now, and the stock's not flying up. And even if we had 4 million shares sitting here, right? If you take the 20,000 times, 100, you would have 2 million shares right there. Well, 2 million shares is a lot on a low float stock. We got a ton here at 7, right? Even if we filled this up where each one of these was 1 million shares, if all they're doing is offsetting it with some of this down here and shorting and keeping the price pinned down, then it's never going to actually move. So, not financial advice, but there's no point in me buying shares. If I just bought 30 calls at $2.50 and let it expire, yeah, I mean, I'm not trying to tell people to play options. I'm just telling people that, like, right now, if you're routing through IEX, I really hope that they are getting out there and they're hitting the lit exchange, right? But a lot of people that don't know how this works, they're just buying shares, and then their shares will become a T+3. And then after that, their T+3 may or may not actually get bought, because these brokers could actually choose to fail to deliver instead of buy your shares. And that happens sometimes. So, people want to understand how all that works. There's a couple good videos on that. But essentially what you have to learn is your broker's not your friend. Your broker's looking to make money. And you being successful at trading usually costs them money. Because hypothetically in this case, say they went out and they chose not to buy your shares, right? They just put up basically the shares, as soon as you buy the shares, they show up in your account, right? But that's really an IOU. So if you want to learn how all this works, this is the basically nuts and bolts of it. So say you go to your broker. I'm using TD in this example. So I go to TD and I say, I'm going to buy 4,000 shares at, $3.60 today, right? So I bought those shares. They place that IOU in my account. I look at them and I go, oh, my shares are there. But in all actuality, my shares are not actually there. They have today plus 3 days to actually deliver my shares into my account. If they do not do that, then it becomes a failure to deliver. And sometimes their strategy is to actually fail to deliver because they don't want to actually buy the shares when they're more expensive than when you bought them, because they chose not to buy them now, which means that they're waiting for the price to go down below where you bought them, or at least near where you bought them, so they don't lose out on that, because they chose not to buy them right away on the market, because this, the stock is actually hard to locate shares right now. So the nightmare scenario, and the reason why you get FTDs sometimes that pile up is because they are choosing at this point, like FTDs when the stock gets lower are easier because, like, obviously there's more shares that are out there in circulation again, but at the same time we got off FTDs because of the extra shares that hit from the Armistead private placement. When those guys, they actually had shares hit the market. So I'm still going through the float stuff. I didn't get a chance to finish it today, but I will work on that tomorrow. Hopefully I'm not busy again. But yeah, like what you're going to find out real quickly is that they're going to do everything in their power to basically keep it pinned in this area. Like, just plain and simple. I don't want to, but once again, back to the broker thing. I'm sorry, my ADD is going nuts, but back to the broker thing. You buy those shares, you assume they're there. They're probably not. And your broker, say you buy them at 360, right? And then the stock runs up to like $5. We're like, well, we don't want to buy these shares at $5. So they'd fail to deliver. They eat their whatever small fine. And then say a couple days from now, the stock goes back down to like 350 or 330, right? They may choose to buy then and then put your shares in there, and then they reset their FTD. So, that's how this works for them. You think that your shares are there and they're legit, but sometimes they're not. And that's the honest truth about how these markets work, is because they don't have to settle things instantly. This isn't like blockchain where they instantly settle out your account. These guys have time to basically dick around and, basically play you and the rest of the market to get themselves in the best position possible so they can make the most money. Because what happens, say for example this happens, right? So you came in and you bought your shares at 550, right? Boom, 550, buying it, right? And then they decided that they're not going to buy those shares. Like, your broker's like, I'm not paying for that. So they sit there and they give you T+3. And say 2 days later, the stock's all the way back down at 350, right? And you sell. You freak out. You're like, oh my God, the stock's going to go down to 2 again. So you sell right here. Well, guess what happens, right? So you bought them at 5. You paid, let's say you bought 1,000 shares. So you paid $5,000, right? That's you paid $5,000, right? And you got your 1,000 shares, and then you sold them at 350, right? So that's $3,500, right? So what they do is they go back. You paid them 5,000, but they only had to buy them at 350. So they close out their, it's still within 2 days of when you bought them, and now, do they give you back that extra money because you paid them 5,000? Do they give you back that extra 1,500? No, they don't give you back. That's their profit plus the bid ask that they, when you exercise or when you bought those, those shares, they made money on the bid ask spread. They also made money on when they bought their shares, which was 3,500, and where you paid them 5,000. So they profited an extra 1,500 off you being a bad trader essentially. So that's my point, is your broker's not on your side. And anyone that thinks that your broker's on your side is very, very wrong. They like unprofitable traders because you guys give them money. And so when the RSI is completely oversold, right? When the RSI is way, way down here, when it's dipping down below 30 and everyone sells, it's better on the daily, but let's do an hourly, right? So down here, right, when this went from 7 all the way down, RSI was completely oversold, right, and everyone was freaking out, right? What was the stock price then? What was it, 4 something, right? So it went from 7 all the way down to 4 within a day, right? It gapped down and then just completely bled out that whole day. And then people, look, it's completely oversold there. If you had just waited 3 days, it would have been back up here at 5s, and you could have, but that's the example. So the people that bought up here at 7 and then freaked out when the thing waterfalled and then sold for 4, though they only had 1 day in between that. Guess what? Your broker made a ton of money on that if you sold. And this is just how it works. So. What's up, Hen? What's up, Chris? All right. Shout out to you all. What's up? All right. We need a whale to throw like 5 million into Aterian. Yeah, I mean, we already have a couple whales that already have like 5 million in Aterian apparently. So open interest is always neutral. For each buyer, you need a seller. Therefore, half of them are calls, or sorry, half of the calls are bullish and half of them are bearish. Yeah. Ish, yeah. Like, that's the theory behind it, but, you know, obviously there are a good amount of, like, it's skewed right now. There's more bullish interest in Aterian right now than there is bearish. And sometimes market makers just literally make the market. So they're willing to sell you things that don't actually exist. Like, if you actually, like, look at, like, the options chains, right? Right now, there are more shares out there than probably exist in the actual float, right? If we actually looked at like some of this open interest, right? It's not like the entire thing, but if you figured we're 100% utilization, right? So how many shares are really available? If this ran to 22 tomorrow, do you really think they have all these shares in circulation? No. But their job as a market maker is to make the market. And so if people are willing to buy all this stuff up here, that's fine. But they know that it will never go up there. So therefore, they will just go ahead and say, okay, well, we'll sell it to them, even though we know that, you know, we don't have all these shares. So it's not always completely neutral, Fish. I had messaged you and asked you about, should someone sell their in the money calls in regards to IV spikes? Can you elaborate on that? Like, the basic concept is this. So if you're, for example, the IV spikes are going to be the highest when you have large movements, right? So this day right here, that morning that we ran up to 720, that was a huge IV spike. And if you actually looked at the, you know, IV like on a timeline, you would probably see that was a huge IV like moment, right? If you were choosing to sell in the money or out of the money or any sort of call that was bullish, your IV would have been so high that you actually would have made a good chunk of change. And so if you were choosing to roll something, you would want to, you know, sell on the IV, like a large IV spike, or even anything that's like an aggressive green candle, right? You would sell on those ones, and then you would try to wait and then try to buy them back lower for a longer date if you were rolling. So that's all I mean by that. But yeah, like, I'm not telling anyone to do this. You just had a question about when you would, you know, you don't want to sell your call options when they're like tanking. Just like that, you want to basically buy when things are tanking, and you want to sell when things are like, you know, the opposite, when the things are doing really well. So like, if you were to do it perfectly, right, you would sell a contract here, and then you would buy back down here, and then you would probably end up with more shares for a longer amount of theta. So how do you buy your shares right through the exchange? You have to find a broker that actually is putting your stuff on a lit market, or you have to buy in the money calls that you let expire in the money if that's how your broker works, or you have to exercise them at the end of like the day on Friday. That's essentially how it works. Hello. Host, good morning. Morning. What's up? Yes. What's up, Andre? So basically, we're getting effed over and over and over and over again, then some more. Stocks are cool. Love the market. Super fair. Yeah, welcome to the U.S. equities market. The system's broken. Like, I'll just tell you that now. If you're looking for a fair game, there basically isn't one. You can try maybe. I mean, there really isn't one. I heard the Japanese market's a little bit better than ours, but, you know, I don't trade that one. I just trade this one, and so I get to see how ugly and bad and unfair these markets are. I mean, they shut off the buy button, which I'd never seen before on a like major stock, like for GameStop, AMC, all these, and it was because the brokers couldn't afford it. So remember I told you guys, these guys have the T+3, right? So when GameStop was running, I just want to show you this so you guys understand this, right? Here's GameStop, right? and we'll go back in history to when they ran all the way to, what was it, like 600, that pre-market. I think it hit like 500 pre-market, and it didn't show up on here because it was pre-market, and it went down right away because they shut off the buy button, right? But let's look at this real fast. Like, they removed the buy button. But remember, so they were buying here, right? So if you bought your shares on the 25th, right, they would have had what's called T plus 3, right? So that day, 1, 2, 3, right? So the shares would have been due by this day. There were so many shares. If you look at the volume, right, there was a huge amount of volume. They had owed all these shares, right? And the thing was, the brokerages that were really like super popular back then were pretty much like Robinhood. And so here's the thing. Robinhood would have had to figure out a way of coming up with hundreds of millions of, like, not hundreds of millions, but like millions of shares of GameStop that they didn't have, right? So they needed to basically come up with billions of dollars worth of GameStop, because at the time they were like 200 something a share, right? And the stock price keeps going up, right? So look at this. The stock was trading in the 400s here, right? So the broker's going, I can't afford these things up at this price. Like, we'll go out of business. This is how it works. So what did they do the next day? They shut down the buy button, so these stocks have to plummet so they can actually start buying their shares, so they're not out of compliance, because they were already on FTDs. They were already, like, if you look at the reg show, and like, I think I saved it. Let me pull up real quick the reg show and the FTDs for GameStop. They were already on these lists, and some of these guys got margin called, so they weren't expecting the stock to shoot up into these prices, but the small guys started getting margin called in these areas, which sent the stock rocket high. And so let's pull up GameStop's reg show, right? So if you look at this, right, the FTDs around this time frame were like getting through the roof. Like, I mean, you're talking about a stock that had probably what was the float back then? Like, it was only like 20. It was like a small float, and like, it seemed like half or the entire float wasn't delivering at some points. So, I mean, look at that. Like, the reg show was on there 4 times. It was just, I mean, that's insane to have that much FTDs, like, at these peaks. That means they were just choosing not to shoot, and this is when they got to push the stock down, right? So it ran all the way up to here, and then it ran back down because here's the 400 something, right? That's that red bar. So yeah, the U.S. equity markets are not fair. They are rigged, and this was a special, because once you understand why they couldn't keep going like this, because the brokerages would have gone out of business. The brokerages didn't have the ability to buy these shares at their normal levels, and if they were basically being forced to buy because people were getting margin called and this stuff was going out of control, that's why they shut down the buy button, because it would have continued. It was like a self-perpetuating loop. The more and more people that couldn't do it, then you would have had more margin calls, and these big guys like Citadel, Susquehanna, .72, all these big hedge funds, they would have actually gone under, because after these other small guys got margin called, and that's why they turned around and they bought Melvin, so they could actually basically try to get control of the situation. Because if Melvin couldn't get that cash infusion to help drop the stocks, they were going to basically make Citadel and everybody else go bankrupt. And it was a big deal, and the entire market was crashing at that same time frame. Like, I mean, if you actually looked, like, they were having to sell regular long assets to actually start paying off some of these GameStop things. So yeah, like, the market's not fair, it's not right, and then, honestly, it needs reform. But until we actually elect politicians that are going to do their jobs and actually protect the American people, then yeah, it kind of sucks. I just don't see these whales dropping that kind of money. Yeah, I mean, so Chris, I understand what you're saying about the options, because obviously someone bought these up here, and there should be a plan in place, I'm sure, for them. I'm not trying to present a bearish case. I'm just showing you that, like, in my opinion, unless somebody's going to just slap the ask and push this up here, which that's the longs have the ability to do that. Retail does not. The only thing retail could do that would help is to basically build up this case to help offset some of these, cheaper out of the money puts that they're stacking. But really, when it comes down to it, either that or retail is going to have to get on lit exchanges and slap the ask. And what I mean by that is you have a bid and you have an ask price. And usually, most time, you're trying to get the cheapest amount. You want to enter in, but you also want to pay the least amount, right? But if you do that, then the stock never actually moves. The way the stock moves is if you keep hitting the ask on it, the stock will start moving upwards, right? So that's how these, institutions and the smart money is able to actually manipulate a stock, because if they slam the bid, that means they can drop the stock easily. And because most retail doesn't actually hit the lit exchange, then they never actually get to, have any buying pressure. So like you could have 200,000 retail traders, 200,000 retail traders buying Aterian, right, all day long. But if only 90% of their stuff goes off exchange, that they literally are washing out every single retail trader that's buying bullishly. And then when they feel like it, they can just slam the bid and short the stock and use, short exempts. And they have a million tools in their toolbox. The reason why sometimes things can, win, though, like GameStop, AMC, is if eventually somebody comes in that's a whale or like a smart long institution, smart money, and they know how this all works, and they slap the ask on the lit exchange, and they are able to get the stock price moving. Because if you constantly are bid whacking, you're bid whacking on these options chains, you're hitting that, and then all of a sudden a whale comes in and does the opposite. They start slapping the ask, and it becomes a real battle, and whoever has more firepower is going to end up winning that. So if you don't have all the shorts at your disposal that you need, and somebody just keeps buying up everything that you're trying to sell, then eventually they're just going to send the price flying. And that's what you had here on GameStop, was people were buying, retail was FOMOing in. They were having all these FTD problems, which meant that like all the people that were buying back in this range, like when you see the volume spike here, right? Now you have to have these like T+3s. They washed out most of these trades, but eventually they came due. And so once they started coming due, it sent the price higher, and then eventually it came to this meltdown point. And like retail for that point had pretty much burned out all their money. And then we had these huge swings. So, but same thing with Aterian. Like, I mean, if smart money comes in and just starts slapping the ask, then yeah, like the stock will go to the moon, because the options chains are there and the market maker has not hedged yet. So, but that's what it's going to boil down to is, I mean, you're going to need to see, I mean, we're still in an uptrend. The MACD will start crossing over towards the end of the week. The stochastic is still crossed over and starting to enter into neutral. And then, yeah, I mean, we're doing fine. The RSI is slowly going up. It's not like, a straight line up, but we're definitely moving upwards now. So we're in a bullish divergence right now. We're breaking out of this down channel, and so I think we already broken out of it. Yeah, we're about out of it now. So their goal is to try to pin it here, because that's what would be max pain. And so retail needs to kind of learn how all this works. But yeah, IEX is a lit exchange that should be able to, you should see your trades actually happen on the lit exchange. If you're not trading through that, your shares are basically just getting washed out and becoming T+. And here's the thing, you can switch brokers if you want. Obviously, you could just open another account, and then if you had some extra money that you were going to buy with your other brokerage that doesn't allow you to trade and have your shares represented on the lit exchange, then yeah, you always put some money in there and try buying through there, and then you might actually see some buying pressure. Can you explain the warrants? I heard there's some at 25. If the price was to squeeze to 25, that means that they can dilute at that price and the price would drop. Can you please explain? Sure. So warrants are pretty simple. They're basically like they're kind of like calls, but at the difference between a call and a warrant is warrants are dilutive in nature because they increase the actual size of the shares outstanding. Shares outstanding is the amount of shares that a company has issued, right? So currently our shares outstanding are probably around like 63 million, 62, 63 million, right? I'm still crunching the numbers and I have not finished them, but I think it's around 62 or 63 million, right? After the private placement. And those are starting to come out and hit. I saw a filing that hit yesterday, I think. So there was a couple more shares that came out of that. So what this means is that at $25, those warrants are going to be what are called like basically in the money. So at that point, they can be exercised. And when that happens, that means you have more shares that will hit your actual like shares outstanding and by proxy, your float. So all that's happening is there's now more shares out there. So that's what dilution is, when you basically distribute something that's now a little bit further out. So there's more shares, therefore makes the stock worth slightly less, depending on how big the dilution is. For example, like BBIG, Prague, the shares outstanding are like 200 million versus ours are like 63 million. So they have a huge amount more like shares out there, and they use those to basically raise money. Aterian hasn't needed to do that as much. Last year was kind of the anomaly because the shares got diluted by High Trail. That they violated the trailing EBITDA. So what ended up happening, just a long story short, is they had terms in their contract that said that they wouldn't get into basically like a bad situation financially. And during the crisis of the shipping containers, they got themselves in a bad spot. And basically they violated part of their debt agreement. So what ends up happening then is they had to give up shares that were dilutive. And so the company went from like 25 million like for a float to all of a sudden like I think it was like a 30 million float or something like that back then, if I remember correctly. And they basically like had to give up like something like 20 million or some really high number of shares and warrants out to High Trail, who immediately sold them onto the market. In this case, with a private placement, those warrants can't be touched. The new warrants can't be touched until September 6th. But yeah, at $25 a share, there are warrants there from a previous. I think it was like a merger warrants, I think they were called. But all that means is that when the stock gets up there, those are able to be exercised. So the companies that bought those warrants would pay the Aterian the money, what they were worth essentially, and then Aterian then collects some cash, but at the same time they dilute their float slightly. Would it actually send the price down? Yeah, temporarily, but it all depends on how much volume's there. So if like we were trading 150 million, yeah, that would go really quickly. So because there's only 5 million shares there. So it's not like we would all of a sudden give up 25 million shares at 25. Like it's 5 million shares. It's a good amount, but it's not enough to actually stop something if it was running. And if we were running to 25 at this point right now, the volume on this would be very high, and that would probably be a target for them to at least slow down or try to reverse something. But it doesn't mean it actually would kill the squeeze. It just means it would slow it down temporarily. But if there was a huge amount of volume, buying volume, then yeah, it could potentially still run and then eat up all those and still move on. So, okay. But hopefully that explained how warrants work. And warrants typically have longer time frames than calls. Like calls might have like 2 years out for a leap. Warrants can be like 2026. We need a simple video explaining how our shares don't make it to the lit exchange, step by step how to make sure that your shares do. Yeah, I mean, I don't know how to. I'm not like a YouTuber really. I come on here and I talk to you guys, but like I can't make clever videos and short stuff. Like I answer questions that you guys ask. I don't have a ton of editing skills, so I can try, but the problem is I still work a full-time job, guys. Like I work a 9 to 5, and like I'm not in the office every single day. Like sometimes I have to go out in the field. And what ends up happening is I can't sit around and make YouTube videos all day and write DDs, like this is just not possible. That's why the end goal was to eventually make me a streamer, so I could dedicate all day long to trying to make videos and streaming, stream the market and stuff like that. Like, if I had to not stream for half a day, leave the stuff up, but I'd be working on, for example, a video that would explain how all this works, then that's fine. Like I have a really bad format right now. Like me talking in front of a blank screen or like a Aterian screen is not going to bring in hundreds of thousands of viewers. Like I don't even have 2,000 subscribers. So the people that are listening to this have been listening to this now for like months. And they've been reading my DDs for months. And so I'm not reaching a new audience, really, that would understand how this works. And you're right. We do need simple videos to explain how this all works and how – because this is stuff retail doesn't know. They think they're helping and they're buying, but it's not actually hitting the lit exchange. And then when the stock goes down, they freak out and they're like, well, retail's bailing. And the retail's not really bailing. Like, look at this. Look at this, right? We have all this downward pressure right here. But look at the volume. Like the volume was tiny. They're just getting people, they're shaking the tree because they're spoofing and they're doing all sorts of things to drive the price down. And retail doesn't understand it and they freak out and they sell. And then it's like their brokers make money on them and they just don't understand how any of this works. It's sad. Like I wish more people understood how this works. Can you explain open interest? I have $802 calls for this week's, but it only shows 300 OI. I'm assuming I'm missing something as I thought it was. Yeah, so Ben, it depends on when you bought them, right? At $2, I don't see those. Can you screenshot that and perhaps send it in the Discord if you're part of the Discord, Ben? Because if you bought $802 calls for this week and it's not showing up, then that means they're not placed. Like that's something the CBOE should be really like aware of, because that would be basically market manipulation if they're not actually showing all the open interests. Like their job is to keep track of all that stuff. So yes, if you bought $802 calls for this week and it's not showing them, then that's literally like not correct, and that's illegal, and that's something that the CBOE should be aware of. CBOE is the Chicago Board of Options Exchange or something like that. I don't know if that's it's something like that. Now I have to look it up. What is CBOE? It's the Chicago, right? CBOE is the Chicago Board Options Exchange. And they're in charge of all the options. But if your stuff's not like showing up, that means that would be. Wait. I'm sorry, I'm reading on further. Do you have 8 contracts, 800 shares, or do you have 800 contracts, 80,000 shares? Let's see if he writes back. I'm just scrolling down through this. Hopefully Ben is still here. Because if he has 800 $2 calls for this week, that means that's worth 80,000 shares. And if that's not showing up, there's something inherently wrong with that. All right, a whale must have come in for Robux, which pumped so fast. It's not really a whale. So let me just explain this to you guys. So everyone thinks, right, and I've explained this before, right? Here is Redbox, right? So Redbox out of nowhere pumped, right? It was down here at 1, it moved up, right? And then boom, it hit $11, right? Why did it hit $11? Anyone know? Anyone know? So hopefully some of you will answer. Let's see. So why was it $11 for anyone that's, They had warrants. Correct. They had warrants up there, and there's actually a rule that lets underwriters pump something like legally so they can get their money out. And so a lot of these small cap stocks have warrants at 11. And so somebody was trying to get some cash because they need cash, right? So Redbox was literally out of money. They were in a very, very bad spot. And so they needed money desperately. So they actually, let me see if I can pull up the information on this, because I think I did a little bit of research when people started bringing it up to me. Yeah, no, I'll go back to Aterian in a second, but I wanted to explain why this happens, right? So right now they're burning about like $14 to $15 million a quarter right now, right? So every couple months they're burning about $5 million. What they needed to do was they had warrants up at 11. So what they needed to do was basically pump the stock all the way up there so they could release some of those warrants, right? And so, let's see. And then they also have now this, what was it, the merger, right, with CSSE, is that right? So receiving those shares of CSSE, about 70 cents worth. So they were trying to basically raise some cash, and now they actually have some cash. They raised about $20 million on that. So they can at least get through, and now they're also going through a merger. So there's a whole bunch of stuff going on with this, but there was a reason why they went from 1 to 11, and that's part of the reason. So I just wanted to throw that out there. And that happens for some of these small caps too. Like you will see stocks that need to, the underwriter just wants to get out, and they will pump the stock just to hit those warrants and get their money out. So they should pump it at 25 for Aterian. Yeah, right? That'd be nice, right? Let's see. Did Robinhood... Hold on, let's see. I have to go back. I think some people... So Ben never wrote us back and let us know if he had... Does every brokerage have their own number of FTDs? Actually, Trent said this, yes. So you may actually have multiple different brokers all failing to deliver, but some of them are able to reset theirs and others are not, which means that your reg show can go on longer than, because it's what's called an aggregate. So the aggregate is what actually matters. So if, your brokerage clears off their FTDs, but another brokerage does not, then yeah, that's how it works. So assuming the great majority of retail investors basically trade off a phone like Robinhood, what's the best recommendation to exchange? Yeah, so unfortunately with Robinhood, your shares are never hitting a lit exchange. There's no way of routing through IEX. Your best bet would be to, go to a broker that allows you to select your routing. But yeah, people literally buying, thousands and thousands of shares, and, they never hit the late exchange, and that's sad. Please no clever videos and talking like a car salesman. Yeah, I don't do that, so I'm pretty straight shooter. I'll tell you guys when I don't like something. And Cindy says, hi, Cindy. Gary, I use Merrill because it's tied to my BOA, so instant transfers. And hopefully you can route through IEX, Jerry. All right, I found you on FTF. I don't know, what's FTF? I found you on StockTwits. I found you on OnlyFans. What's funny is I made a StockTwits account, but I haven't really. I need to start using it. It seems like, I don't know. Maybe it's just me, but every time I go on there, it feels like almost like a bipolar. Like just both sides are screaming at each other and mocking each other. It's like, Reddit's pretty bad itself too. So I am not, but I don't know. I haven't gotten used to that yet. Maybe I will someday. Sorry. All right, Anon. I can be an assistance with the video. Send me a message. DM me on Discord. And I probably need to put up the Discord link if you're not on it already. Where's Discord? Invite people. Expires never. Make a copy of it. And okay, there you go. So let me go back. Okay, so yeah, warrants. People are talking about ARC. Yeah. Did Robinhood stop people from selling, Jimmy? No, they only. So that's the thing. So if Robinhood shut down the buy side, you can only sell. The stock's going to go down. You literally had no choice. You either sold or you couldn't buy anything. So when you do that, you can only go down from there because nobody can buy. At least retail couldn't. And then they shorted it, and then they tried to shake out retail. Yep. Okay. So they need to raise it to a certain price to release the warrants. That's correct. I shorted Redbox. Yeah, I mean, like, honestly, I tried to short Redbox the first time, and they said that I wasn't. It was hard to borrow, and I couldn't get shares, so I wasn't able to do it. But that would have been a really easy short, and they don't have options on them, so I couldn't buy puts. But yeah, it would be nice if they pumped it to 8 or to 25, but that's not here yet because there's too much short interest. I'm still mad I didn't make money because you literally said something at like 5. Still mad I didn't make money because you literally said that at like 5. Yeah, I mean, I told you guys it was going to probably move up. I said, listen, I'm not going to do it, but this is what's going to happen. All my money's locked up right now in Aterian, so. He has 800 contract, 80,000 shares. Expiry for... Yeah, hopefully expiries for this Friday. Ben, you need to contact the CBOE because that is not correct. If they're not showing your options, then how many other options are they not showing? Especially deep in the money ones. Something's inherently wrong with that. So... I just love how Vlad from HR tried to justify taking the buy button away by only taking away the put function on options. Yeah. Yeah, I would. Yeah, I think tomorrow you need to contact your broker, Ben. Who is your broker, Ben? I just want to know. And that's actually something that should go to the SEC as well. Like, they should go to the SEC, DOJ, like... Yeah, OBV looks fine. Here, we'll just do... So here's your money flow and your OBV. And if you look zoomed in, it's coming back up. OBV is rising. It's starting to come back up and meet the money flow. Like I said, right here, this whole area just some stinks here. Something stinks. All right, so it's starting to oscillate into the green again. You can tell what happens on these awesome oscillators is even if you're on the downside, as they turn green, it means the prices, there's some accumulation happening, and then there'll be a rise up, and they'll cross over onto this side, and that's usually when you get runs. Same thing it shows on the TTM squeeze indicator. we're starting to go yellow, and then once we go to yellow, then we'll get back into this. We'll start. These green dots are usually like good indicators, and then once you get into this is when typically you've hit your peak, and then you see these darker blue. That means you're coming to an end. And I crossed over down here, and now we're going to go back up again and run. But you can tell right here. You hit these blue ones. It showed like one other day that could have gone back up, but instead it went down. And then once we crossed over here, it just bled. And this, you had these couple of days where it was like, oh, well, something happened here. And then, you finally got some buying pressure around here. This is actually where I thought the spring test was. I thought this down here was the spring test around 245. It bounced perfectly off that. That was the current asset values. Started running. You saw some bullish type versions, and then it got shorted back down. This is when the war in Russia starts. They just, piled on here, and then we hit that all-time low of 210 down here, and then a couple weeks later, we made that run, and then we're going to probably go for another one too. So Fidelity. Yeah, I mean, you need to talk to your broker. You need to contact the CBOE and find out why those shares aren't showing up, and I would report it to the SEC and the DOJ, and I mean, if you want to DM me, Ben, on the Discord, I'm happy to help you with trying to figure out how to get all that stuff reported if you need help with it. Because if you bought those options, they should be showing up on the, this. Basically, there's an institution that's supposed to be regulating and showing all this stuff, and the fact that you need to take screenshots now, like take screenshots before they fix it, because. This is the kind of stuff that alters, people's judgments. And if they aren't showing, bullish calls that should be deep in the money, you're literally influencing, this open information that we all are looking at, and how many other people are they doing this to? These are like activities that should not be happening. Yeah, I mean, yeah, but make sure you take screenshots of it. Yeah, I mean, because these are things that, once they fix it, you're never going to get that back. Chu wanted to know, what was it? What was Chu's question? I came here because Fish Guru told me about some options thing. Oh, yeah, it was probably about Ben's. So Ben has 800 contracts at $2 that are not showing up on, I do have the daily up, I think, right? This is the daily for today. So he's saying that and hopefully maybe you can get the screenshot up, but is this the right? Yeah, this is the right one. So he bought basically 800 contracts that should be sitting here in open interest, and they're not. So this number should be like 1,400, if not even higher, with the extra 400 today. So the only thing, though, is if you bought some today and you already had some from previous, then the combination of the two wouldn't show until tomorrow morning. So I just want to throw that out there, Ben. If you bought shares today at $2, these contracts, like say, for example, you bought 400 last week and you bought 400 today, those 400 could be here in the volume and they won't be in there until tomorrow morning. So just want to make sure that's not the case before I get too out of sorts. But you have to let me know, though, because that would be a very easy explanation for that. Did you buy them today, like a good chunk today, and the others are sitting there? So The terminal shows 652 $2 calls. Yeah, but like I said, like this could be a case where if he bought part of them today, and he had like maybe six, say he was the one that bought 600 contracts last week or something like that, and he bought the other 200 today, they could be sitting in the volume, not moved over to open interest until tomorrow. So let's see what that actually, this would be very, very, unusual to not have those shares, or not those, contracts showing up on the because all this stuff is supposed to go through the brokers, and then like if they don't report that, that's a huge issue. And how many other people are having the same issues then, because people make financial decisions based off these things, and they're supposed to be regulated, and obviously if they're not being, then that's a huge issue. All right, let's see. Yeah, so just to clarify, you guys, whoever is posting on Reddit and keeps being like, I'm being shadow banned, I think it's Matt sent me something. Listen, if you don't have the karma or the like requirements, see, that's the case. So he bought 400 today. So he bought these 400 right here, and he might have already had the 400 here. Yeah, so that's all that was. Okay, that makes me feel better, because I was like, that's highly unlikely. That usually happens that way. Yeah. So just remember, they don't settle until the morning. So the open interest will transfer, whatever was bought or sold will transfer over to open interest in the morning. That's what you'll see. So, like, for example, like, say all these are bullish, or maybe half of these are sold out. So tomorrow might be 5,000 because 1,000 people sold and 1,000 people bought. So then this would only become like 5,000. So okay, if somebody uses a broker where you can't buy shares on the lit exchange, does buying in the money options with the same broker mean you'll get the shares on or off the lit exchange when exercised? They usually go on the lit exchange when they actually go through the broker. So that's what should happen in theory. So Ben was saying, I would check the OI in the morning to make sure it checks out. I have a hard time believing that I have 400 of the 652, even without the 400 today. I mean, it can't happen, though. I mean, I just, we'll see in the morning. So what we should see is there should be at least 800 in open interest minimum. And then that 800 are yours, and then there might be only, a handful left that are somebody else's. But, that will be something that's at least helpful. And, I've got some $1, I've got some $2, I've got some 250s. But this is what I think is going to be what's going to be kind of like the thing that kind of pushes us up a little bit. Because if those are, but I don't know, Ben, I mean, hopefully you have enough money to exercise all them. I mean, because that would be the best revenge. If you just have them to like sit down there, and at the end of the week, you're going to be, Theta's going to eat those. So hopefully you have enough money to exercise all those 80,000 contracts. Let's say what was 160,000. So what do you think the best options to buy before, not financial advice. Well, first off, I don't think any of these, Aterian's not going to force anyone to get margin called unless they're a very small firm. Just wanted to throw that out there, because Aterian's not a large market cap, so they're not, this is kind of like play money for a lot of these hedge funds. They're able to easily manipulate and control this stock. Now, at the same time, what you'll find is, hold on, I just realized I need to do something. Go to this, and let me just fix this real quick. I just realized. Okay, here we go. Sorry about that. Yeah, Ben, I have karma on Reddit, but I can't post. I've had the same issue and can only comment. So what happens typically, Ben, is there's like multiple things, and I don't know. So you need to have a account that's at least 7 days old with at least 10 post karma and 50 karma posts. Or, that's what the auto mod is supposed to be set for. I don't know why there are people that have those requirements, but they're still not being able to. There's an auto mod that's set up, and No Stretch is the owner of the sub, and he made me and Ninja mods, and he went MIA. And so what ends up happening is if you post something and I don't catch it or Ninja doesn't catch it, then we don't actually get to see that. So what you have to do is you have to DM me and just say, if you say you write DD and you want to get it approved, just DM me and I'll just click on the thing and get it approved for you. But I can't change the auto mod because I'm not the owner and the owner's gone. So, and I don't get to see new posts that are removed by the auto moderator unless I click on the individual's name. And obviously I don't get to do that because, there's hundreds of people trying to post. And so you need to actually come out and like DM me and let me know, or Ninja's in the Discord as well. I have $203 calls I'll be exercising and at least 800 of the 1,000 calls. Not enough powder for everything. Yeah. All right. So let's see. All right, so someone want to know about the broker, right, buying in the money option. So the way it works is this. You should be able to, if you bought, like my like TD, when I let them expire in the money, they automatically, if I have the cash for it, they'll automatically turn them into shares over the weekend. Not every broker's like that, so I recommend contacting your own broker and finding out. But that's how my broker works. But call your own broker, find out what happens. If your broker doesn't automatically do that, then you need to exercise those at the end of the day for shares. So like 350 something, you can exercise those because you made them basically hold it throughout the entire time, so they can't de-hedge them. So, but yeah, I mean, if people were to buy like what Ben was buying, then we'd have much, there'd be a lot more buying pressure that would have to start occurring if they really thought they might actually have to provide, thousands of shares down here in addition to, because, this is already filling up pretty nicely. So the question is, if this starts filling up nicely as well, it will get cheaper as the theta decays. And that's the one thing. So just throwing it out there. Sprinkle humble. I'm over all the requirements. Yeah, Ben, I don't know. And I think I've actually approved one of your things, but I've had to like go into your account and actually manually approve them. For the record, by the way, we did hit 14,000 members on Reddit for the sub. So, I mean, Aterian's still growing. If you want to look at the metrics. Okay, here we go. Oh man, there's so many blocked messages. It would take me forever to go through these. I'm not going to do it now. But what I wanted to show you guys was this. Traffic statistics. If it loads, here we go. Looks like they haven't updated this in a while, but, you know. So we're, you know, if you look at unique members, there's been at least, over the last 7 days, there's been at least 43,000 people that have came. Our members right now, we've gained about 4,500 in a month, and another basically 300 in the last 7 days. And we're getting almost like 500,000 over the last 7 days page views. So there you go. I guess you guys are going to go on Ben's yacht when he hits a jackpot. Yeah, I mean, if people start filling up down here and also up here where it's near the money, we have a shot at going to 5. And if it gets over 5, then that's when the real magic happens. But getting it over this hump is going to be the hardest part. Now, the next thing is, obviously, that's not financial advice to buy anything, but you buy your own stock, you trade your own stock, you buy and sell whenever you want. It doesn't matter to me. But, you know, if you were looking at this would be the hump that it needs to get over. So, like, that means that all this stuff needs to get filled up. And the theta is starting to decay. So, I mean, it's going to get cheaper each day that goes on. But, you know, how much are they really hedging? I don't, not a ton right now. So, the OBV is still up. Money flow is still up. Obviously, the price is not following yet, but we'll see what tomorrow looks like. Tomorrow's going to be a day that's going to be very, very interesting to, what happens down the line for this stock. Where is it? Here we go. So hopefully people still have a little bit of ammo left, but, we really need new eyes on Aterian. And we don't get new eyes unless we have these huge candlestick days, and we have not been getting that. Look at us moving up. We're moving up on very low volume. Yeah, it's 10 million. That's not low, but at the same time, when we made this initial move, we went up 150 in volume that first day. There was a lot of new money rolling into Aterian. Right now, we're not having that same luck. So, somebody's still walking the price up. There are clearly somebody's long and smart money is walking this up. But at the same time, if you really want to get some pressure, then it's got to new money needs to come into Aterian, because most of the people that have been investing in Aterian don't have anything left. So if there are some people out there that are an untapped thing, and maybe that's from YouTube, and maybe I need to do better on trying to produce videos that are actually watchable, because obviously these live streams are fine, but they're a very select crowd that's going to actually watch them all the way through. So yeah, I don't typically predict. I mean, you can already tell. I mean, you look at the stochastic, it's moved over. We're going to enter in here. You can tell in the MACD, it's starting to come over, and it should cross over probably Thursday or Friday, maybe Wednesday if it really moves up tomorrow heavily. You could see it touching there, and then Thursday and Friday it could cross over. I'm looking at this, and it looks it's going to be a bullish divergence, and so I would expect them to finish higher than we are here, but at the same time, I think they're going to try everything in their power to keep it from running to 5. Because if they go over 5 and we finish over 5, that's a lot of pressure that's going to be added to the following week. So, yeah, it's just a matter of when, The stock will move up. You've got companies now are long this stock, and it doesn't take much for them. They're going to try to save their ammo, though. They don't want to spend a ton of money, on this tiny micro cap that shorts are obviously very much in and trying to defend. So if they really wanted to move up the stock, they have the ability to, because Renaissance and all these other longs now, they have the ability to slap the ask and have it hit the lit exchange. So, all right. Well, I typically try to end these around 11 o'clock so I can at least get some sleep and then start again tomorrow. Anyone have any other questions that I can answer for you guys? What's up, Frodo? What's up, Faith? What's up, Mashington? What's up, Ka? Bead pictures. I don't know what that means. Even like a 5 to 10 minute video a day to target those with smaller attention spans. Wonder Share Philomora. It's great with editing. It's easy to use. Yeah, I run out of time every single day. Like, and maybe I should be not doing these live streams, and I should be making videos that are like a little bit more digestible. Maybe that's a better use of time. But I am trying to at least answer people's questions when they ask them, and so maybe that makes some people feel better. But I think the message would probably be better served if I was able to get some videos out that actually were like, decent. So maybe I'll see if I can just I need work not to be so demanding. I need to go back to the winter when I had lots of time. But yeah, if I can find enough time in the day, I'll try to make some videos that are a little bit more digestible. I'll write up a script and just talk about them. Or if somebody wants to even help me with that, if you guys have an idea on how to like present this stuff, because that's not something I'm used to, but we can figure out how to make some videos and make it like an easier watch than a 2-hour live stream of some guy rambling about Aterian. Scotch. All right. Becca, you've already do too much. Super appreciated. Appreciate it, Becca. Yeah, we need to figure out, are you able to set up a PayPal or a Square link so we can donate? I do have a Patreon account, Ben. I think this is the problem every time. I always lose the link, and then I have to like try to find it, and I'm not good at that. So let me see if I can. Oh, they've changed it around. I did find where I can post this now. So it looks like. I guess that's my. Is that my Patreon? Or no, wait, that's. I think that I linked you my creator page somehow. I don't know how to change this. I'm not good at this stuff. Sorry, guys. I'm also tired. Maybe this one. There we go. Try that. So that's Patreon. I haven't figured out how I'm going to even like provide great value at this point. Mainly this was just set up just because people wanted me to live stream during the day so they could, listen to what my thoughts were when the stock was trading. But I need to make enough money where I can actually like supplement my income, because I don't day trade to make money. So I'm not able to just day trade all day long and, make money and not have to worry about extra money. Like I have a real 9-to-5 job that I work, and eventually, the goal would be to, quit my job and do, YouTube and live stream and all that stuff. But at this point, I can't afford that. So the goal is eventually, though, if we can get enough people to donate to that, then maybe I can sit there and stream with you guys all day long and, we can trade stocks together, and I can show you how I research things, and I would have more time to actually do the breakdowns of for example, I'm trying to work out the float, and I haven't had time because I keep having to go to work and work at work. And even though I want to do that. Do you actually talk during the day on YouTube? No, I don't. So I just literally stream, and it's silent. So I just leave it on so people can watch the ticker. JK Vlog. Hello, new here. Hey, how's it going? We were just talking about Aterian. I'm going to be basically signing off now, though. But if you want to go back and listen to it, you're more than welcome to. And then I do these pretty much every night during the weekdays. So if you want to join in some other time, Chick Day or Chick K, you can join us. So there's the Patreon. And then the other thing, if you're not part of the Discord, I highly recommend joining the Discord, just because there's a lot of really smart people on there, people I think that are smarter than me that are on there. So let's see. All right, here is the link to the Discord. Thanks, Kyle. Appreciate it. All right, so there's the Discord, and we also found the Patreon. So we had those two up, and so eventually, someday maybe I'll be able to, quit my job and do this full time and hang out with you guys all day long. But until then, what's the price range of the highlighted area of your chart there? It was supposed to be like I think it's like 408 or something like that, 410 down to, I think it was like 210 was supposed to be the low. That actually was too big. It was supposed to be right around here-ish. I think it was like 250 was supposed to be like the thing. Wait, PayPal may not be Anon. What PayPal? I don't think I have a PayPal on here. Yeah, so what I found out yesterday, and just I'll kind of, if anyone's curious about this, and this is the very end of the video, but I went on the YouTube thing, and I was curious how much I was going to make off that. What I found out is you don't make a ton of ad revenues. I was just looking at that. Let me pull it up. So, all right, analytics, I think that's what it's under. Okay, so, and maybe it's because I don't have enough subscribers, I don't know. But basically what I found out was that my revenue for, I've been streaming stuff since, I think, December of last year, right? And they said my ad revenue was a total of $127. So that's not going to pay the bills. Like, they may pay one bill, but it's not going to pay all my bills. So I don't make a ton of money off YouTube at this point right now. Yeah, I mean, it's great. I mean, I'm not going to turn down free money, but it's not free. I'm working. I'm spending 2 to 3 hours a night talking to people for not a whole lot of money, but at the same time, yeah. And if Aterian squeezes, then I'm sure I'll probably there'll be people who are happy and they'll be able to donate maybe more. But what I found out was the majority of the income that's came in so far has just been the Patreon. So yeah, but YouTube doesn't pay a ton. I think they take a huge amount of your transactions. Like, I don't know. I have to look up what they actually like. so they let you create this thing, and then they basically don't. It's probably in some sort of like disclosures that like I didn't read through, that they take like half your money or something like that. So, yeah. So I guess, and it's funny because Patreon takes a good chunk of my money too. I think Patreon takes like 15% or something like that, maybe more. Let's see. I think, yeah, Patreon charges me to withdraw. Patreon charges me like a percentage, like 15% of each donation and stuff like that. But yeah, and the Discord's going to stay on. We'll always keep the Discord on, and I'm trying to keep that from ever being like a pay thing. I want the whole goal of the Discord was for retail to get education, and whether it came from me or it came from other really smart people like DZ or other, there's tons of smart people in that Discord, and the whole idea was not to be like centered around me. Like, I am just like a figurehead, but like we have tons of moderators. We have tons of people who call out TA. It's supposed to be a grouping of retail traders who want to learn, want to teach other people, and that's kind of the idea behind the Discord. So, the whole goal for me is always going to be just I want to help retail, and I want to help them understand how this actually works, because at one point I was new to the markets, and the markets are not kind to new people, because you assume certain things like the markets are fair, that the markets are going to protect people, and they don't. And it's like the wild west, and certain rules get followed, other rules don't, and you will find out very quickly that it's not an even playing field. The big guys control everything, and so if you can figure out how that all fits together, you can make some money. But if you don't, you're going to get crushed, and that's what I'm trying to help retail not do. And it's funny because I get accused all the time on Reddit as someone that's leading people astray, and that's not my goal. I just noticed something that was going on with this stock that seemed very, very weird, and I will continue to try to at least provide information on it, because I think what they're doing to the stock is not acceptable. And it's, honestly, I think it's pretty despicable, because these guys shorted the stock below current asset values, and that's pretty darn, like, that's liquidation prices on a company that wasn't actually liquidating. And they were basically doing it to make sure they couldn't raise money. And luckily for Aterian, they had enough people that were interested in them, so they were able to do a private placement versus an ATM. But if they had done an ATM or had to sell warrants, the stock would have been in really, really dire straits. And so, I'm glad they were able to get the private placement, but at the same time, they should never have been down there at that low in the first place. And the shorts did that on purpose, because they were trying to death spiral the company. And anyone that doesn't understand how death spiral financing works is basically you go to a company that needs cash, and then you basically short the hell out of them, and then you make them not able to raise any more cash in the future, and then you can put them under. And then you get to bury all those FTDs and those naked shorts and all those things, allegedly. Sorry, I need to watch what I say, because apparently I have to watch everything I say now. That's what the lawyer told me. But allegedly, if there were naked shares or if there were FTDs that were piled up and never accounted for, all these things, those would end up in an obligation warehouse with the DTCC, and they would be buried forever, and then no one would ever see them. And that was the goal for the shorts. So, all right. So, anyway, I hope everyone has a great evening. I'll just keep plugging away. I am not telling anyone to buy, sell, do anything. It's just I'm doing Aterian because it's a case study of like everything that's wrong with the market, and I'll continue to at least show people what's going on and what I think is actually happening. Because if you only follow the price, then that's one thing. But once you kind of understand all the stuff that's behind the scenes that makes all this stuff just absolutely disgusting, that's when there's something wrong with how our settlement system works, how our entire market functions. Like it's just so many things are wrong. And I would like someday for them to be corrected. It's a tall task, but it's something that I think needs to happen. And I'm hoping that stocks like this, stocks like GameStop, stocks like AMC will eventually show the world what's going on here. So that's my pipe dream. I hope someday I'm able to help, reform some of the markets, but, we'll that's a tall task. And, if I can make a little dent here and there, that's great. But everyone have a great evening. Hopefully you guys will go ahead and, find a way to beat them. Right, Chris? So, but you guys are awesome for hanging out, and I appreciate you all. And we're coming up with some catchphrase, right? Anon's still at it. Let's no more coughing. Chocolate smooth as usual. Thanks, David. All right. I'm going to be signing off. Get some sleep. It's late here. But yeah, you guys have a great evening, and then I'll see you guys tomorrow pre-market. And then we're going to figure out a catchphrase for me. But somebody wrote at the end of yesterday, later Gators. All right. Good night, guys.